All right. Today is December 17th. Today is a Wednesday, and we are down in the markets. My name is Alan. This is Matt. We are with OptionGenius. And just before we start, we'll do the little disclosure. We're going to be talking about trading. Trading is risky. You can lose money. Make sure you investigate and make your own decisions. Talk to your advisors and don't trade with money you cannot afford to lose. So, Matt, what's going on today?
Good. How are you doing? Well,
Good.
middle of the week, market continues to slide. Um, you know, it is what it is. How are you doing?
All right. So we were up this morning and then I guess it gave up the ghost and looking at the minute chart. Yeah.
Yeah, it was
Well,
quite
we
a
were kind of flat, but then
we started the day in the positive, and it kind of right around, like say 10:30 Eastern, started kind of sliding
mm,
across most asset classes. But no, the no Santa Claus rally as we talk about it right now, for sure.
yeah, well, I mean, I don't know. I mean, Christmas is not here yet. Maybe we'll get one after Christmas when everybody's on vacation. I don't know. But right now, S&P is down 1%. Rut's down 0.9. Oil's up 1.5. Dollar's a little stronger. The Qs are down 1.5. Dow Jones is down. Gold is up. VIX is at 17.5. Bitcoin's at 85 and continues to fall. Silver is up 5% today, making new highs again,
Yeah.
$66, whatever their whatever their I don't know if they're troy ounces or uh I'm not sure how they count silver, but it's 66 something per each one, 66 and a half for each one. So that's on a tear.
It really is. I mean, it's impressive.
Hmm.
See.
Yeah. Uh, I know Robinhood came out with some uh, event announcements, kind of that we talked about earlier, that they will now be getting into the picking of, who's going to win and who's going to get the next touchdown and who's going to get the next first down and all that stuff. They're getting into that gambling 100%. So.
Yeah, it's very interesting.
I don't know if interesting is the right word, but it's a little concerning, I would say.
Well, both, I would say.
You
Yeah,
know,
interesting.
you take something that is meant to be um, taken seriously, which is investing, and right, we have to start off with a disclaimer like, oh hey, this is risky. Don't forget, you have money at risk. You're gonna lose if you do the wrong things, or even if it's not your fault, you can still lose money in the markets. But now, then you put that next to, oh hey, just click a button and let's bet some money and yeah. So I don't know. On the same platform, I don't know if I'm okay with that.
No, it feels like a little opening of Pandora's box, you know? It's just like you can gamble on anything, really.
Well, that's what it is. They are
It
gambling on
is. I
everything.
know.
Oh. What country is Trump going to bomb next? Or, who's going to Israel going to attack next? Or it's just they talk about everything, politics. Yeah, like what's going on with the I guess the Oscars are coming out. Who's going to win the Oscar for this and who's going to win that for that and
It's sad. There are going to be a lot of bad stories that come out of this, unfortunately.
yeah, I mean, there was that one kid from COVID, right? That one story that he was like, "Oh, I lost $850,000 in options trade, and so
All
I
right.
killed."
Yeah,
And then
that
he
was huge.
and he killed himself. And turns out he was nowhere. He didn't lose anywhere close to that. Um, and so now we're gonna have, we have kids who commit suicide because the Chat GPT told them to. That's the thing. There have been several of those. There are lawsuits left and right now. Um, and now we're having, addiction is already a problem. Gambling addiction is already pretty bad. And now you're adding it to the, with the accessibility and the ease of Robinhood, which is already built. on, you know, best practices for addiction.
For sure, for sure.
And all of these social media are. I'm happy that Australia banned social media for everybody under 16.
They
I'm
did
happy
what, a couple
about.
weeks ago? It
Yeah,
was
yeah,
a
it was
week,
last week or so.
a
It
week ago.
wasn't, yeah, I mean, I'm like, oh, wait, maybe I'll move there. It'd be nice. That's the only way I get the kids off that damn phones. You know, like we have a conversation every night, like, please, when you come home from school, put your phones away. And of course, they don't want to. And unless we actually go and force them, it doesn't happen. So it's like,
Yeah, it's a tough situation for sure. But we can only do what we can do, right?
the pendulum is swinging in one way. And the pendulum is everything. Everything works in somewhat of seasons or in a pendulum or however you want to call it. But um, the pendulum is swinging towards um, I guess I don't know, freedom? Like just do anything, be anything. You're allowed here you go, right?
Mhm.
Um, you can gamble, you can um I don't know. I'm not sure.
There,
I don't even know what I'm saying, but
problem
um,
is it lacks structure around it. I mean, the technology is moving so fast, and there's no rules to really kind of catch up with that in a way, I think.
hmm yeah.
Um,
70% leverage on a Bitcoin. If you want to buy one, you only have to put down
hey,
1/70th of the price to buy the gold. Okay, that could cause some problems.
that's a
Um,
good.
yeah. So, all right.
But that's not
So
what we do here. That's not what we do.
no, I would not want to do that. My best trades right now, though, are leveraged. They are gold and silver futures.
Mhm.
And those are doing well because they're leveraged. And obviously silver's going up, but I'm sure the return on a silver future is much better than like on an SLV or something like that. So everything else seems to be kind of stagnating, and those two are doing well. I think banks are still doing well, but it's hit or miss on which one. So um, as we go into the final markets. I do think it's a good month for option sellers. I cannot complain. It's
Yeah,
been
it
really good.
really is.
Everything's kind of slowed down. Um, Stocks that were moving much higher have kind of settled. So um, we'll see. And some stocks like Meta and Netflix that were heading lower and lower and lower, they've kind of bottomed for me at least.
Mhm.
So that's good news. Uh, but we'll see how it goes to the end of the year. You had something that you said you wanted to. That was something that was. What did you say?
Yeah,
It was
I do.
bothering you.
It's bothering me. And it comes up in our classes a lot, right? And there's a confusion about what is an adjustment and what does rolling mean, right? And I think a lot of people get it confused, right? And there's subtle differences which can confuse everyone because they're like, is this adjustment or is this a roll, right? Um, so I don't know. How do you answer that question? Because a lot of people say, hey, I'm rolling a trade or I'm adjusting a trade, right? Like, what is it?
I mean, the way you described it, I'm like, I don't, doesn't really matter. You can call it whatever you want, you know. I'm hopscotching a trade. It doesn't really matter. You're changing a trade. You have a trade and it's not going the way you want, and so you are changing it. Now, adjusting is the broad term. There's lots and lots of ways to do adjustments. The role is one particular type of subset of adjustments.
Mhm.
So there's different types. So there's adjustments, which is a big category. Then there's a subsection, which is rolling. And then in rolling, there's different types of rolling.
Right.
So I can understand why people could get confused, but again, it's just a word play. It doesn't really matter as long as you know what you're doing. To the option trade itself, it doesn't matter if you call it, oh, hey, I'm, hopscotching this trade or I'm adjusting it or I'm rolling it or whatever. Um, but I can see how people would want to get the terminology right, because then if they're explaining it to somebody else, the other person's going to be totally lost. Like, what are you talking about?
Right.
Um,
So I was thinking about this. I simplified it in a way. So adjustment, you're changing something that already exists, right? And then enrolling, you're you're changing that, you're changing the terms of that. So you're rolling it in a different time period, right? So you're not doing any kind of change to the actual trade, is what I see it.
doesn't that sounds the same? So you're changing a trade
Well,
versus even when you're rolling, you're still changing it.
but your exposure is pushed off into a different time period.
Not necessarily.
Oh. So I can give you the exact, let's go with the exact what I have written here.
All right,
Okay? And see what you think about this.
go.
Okay. So, and I'll just read this verbatim. So, an adjustment is any tweak to what you currently have. Okay? We can agree on that. So,
Yes.
it could
Yeah,
be
it's a change
changing
to
the
your trade. Yes.
size, the structure, the expiration, or direction, right?
Mm-hmm.
But you'll be still managing the same underlying position or agreement. So that would
No,
be an adjustment.
I would not agree with that last part.
Okay. All
Doesn't
right.
have to be the same position.
All right. So then a roll is a specific kind of adjustment where you close or fully or partly one position or contract and open another with a later date or different terms.
I don't agree with that either.
Well,
All right.
you disagree with ChatGPT. So,
Man, ChatGPT don't got nothing on me.
well, I mean, it's an interesting, this is
That's gonna be a
an
song.
interesting thing, right? So
So,
let's,
somebody's gonna write a song about that. ChatGPT got nothing on me. Oh,
I saw a
okay.
very interesting, yeah, go ahead.
So, okay, so what is a role?
We
Basically,
need to simplify it for us.
you're taking a trade. Most likely it's a spread or a single contract, right? I've never heard of anybody saying, I'm gonna roll my condor. I guess you could. You can actually roll a condor. I mean, never really thought about it that way, but you could.
Mhm.
Now, in a roll, you're basically moving the trade, and there's vertical rolls and then there's time rolls. So a vertical roll is, hey, I'm in this call spread and it's getting close to the money, and so I'm going to roll my trade higher. So I buy it back and I sell more further away from the trade. That's a roll up in price. You can also roll down in price. So it's buying one and then selling further away. Or you could roll out in time, right? So it's like, oh, hey, I did this naked put and I need to move it to the next expiration. So then you buy it back and then you sell another one next. So that's rolling out. So those are the two main types of rolling that I know. You can roll up or down vertically, or you can roll out in time, which is normally it is the same strike, but in a different time frame. Now you could roll into the future and at a different price. So you can do roll up and out or
Mhm.
up and down. So you're changing the strikes and you're changing the time period. So that's a different kind of rolling. But that is one, to me, that's one subset, like I said, one type of adjustment.
Right. So
Now,
I
when
would
you're,
say rolling is a type of adjustment, right?
yeah, it's a type.
So
It's a
rather
sub.
than
It's no, well,
separating it,
it's not just one type. It's several. So there's several. It's a
right, what you just
subset,
mentioned.
but there's different ways to do it. Now, an adjustment is basically, hey, I'm changing my trade. So that could be, like you said, hey, I'm going to add more contracts. That's a change. That's an adjusting. I'm going to take um my spread, my call spread, and I'm going to add a put spread, and I'm going to turn this into a condor. That's an adjustment. I'm going to roll some of my positions or my contracts. That's adjusting, right? I'm going to what else could we do for an adjustment? I'm going to take my butterfly and turn it into a double butterfly by just adding more contracts, different situations. So it's I have my original trade, now bolting on another trade to it to change my dynamics, to change my delta, to change my theta, to change my break evens. But I'm adding to that. I can also subtract from there.
Yeah, you're
So
changing the structure.
Yeah,
of the
so
trade.
you're changing the structure by either adding or subtracting options. And there's different subsets of that. Rolling is probably the most common and most
Right.
commonly used.
And
Um,
there are many ways, like you just explained. Yeah.
yeah, but I mean, you could say it either way. Say, yeah, I'm adjusting this or I'm rolling this. I mostly like to say I'm adjusting so that it's clear. Um, rolling people have a different conception of sometimes. And it doesn't always jive with what they're doing. So sometimes they think they're doing one thing and they call it one thing, but it's actually
Right.
something else. Um, but in the
That's
end,
interesting to talk about.
yeah. So I mean, in the
Use
end,
this all
it's
the time.
it's it's the same. It's a different process of how you do it. And I don't think, basically it's like we looked at this yesterday, right? So we have a trade in the club. It's what we looked at, MasterCard.
MasterCard, correct. Yeah.
Yeah, so we looked at MasterCard. MasterCard is I believe you had a call spread on, and MasterCard had some news that came out, which sent it striking higher, and now it's close to a point on our system or our plan where we need to do something. We either need to get out or we can adjust if you want to. And so we were looking at the different situations, like what can we do? One thing we did not look at was rolling to a different time frame, right? That's one thing we did not look at. And when you do a spread you can do that. You can be like, okay, I'm going to buy back this call spread and I'm going to sell it next month, or I'm going to sell it to a different position. Now, I disagree with doing that, um, because it's a whole different trade. So an adjustment really is, hey, I'm going to continue this same similar the trade. I'm going to continue it. I don't want to fundamentally change it too much,
Yep.
but I'm going to just give it the ability to give me some more time for my theta to kick in, or to give myself a little bit more room for the trade to work out, or some more time for the trade to work out. But when you're looking at like a monthly spread in January versus a monthly spread in February,
Totally
it's
different.
a totally different trade because the stock is going to be in a totally different place. And so saying, hey, I'm gonna buy this back and I'm gonna roll it to the same strike, or I'm gonna roll it up, or I'm gonna roll it down. Yeah, people do it.
Well, for example, there could be an earnings um,
It could be anything.
next month, anything to affect it. Yeah,
Yeah.
could be
Uh,
different.
but even if you look for that and there's nothing there, it's still fundamentally a different trade, because now you're going from like a 30-day or 40-day trade to like a 60-day trade, that's different.
Mhm.
If you're going to be in the trade for 60 days, you want to get a different amount of credit. You want to get a different space or a distance away from the money, to keep the odds in your favor. When you're just rolling it from one month to the next, you're kind of continuing a fight that you're already losing. And it's not something that you normally want to do, because yes, the stock could turn around and go back down and you would win, but it just as easily could continue in the direction against you, and you'll end up with even a larger or a much greater loss, because now, you might have added to the position. And that's also something we didn't mention. Adding capital would
Capital.
be,
Yep.
that's usually done in a adjustment, doesn't have to be done in a roll. Normally when you're rolling, you want to get it in a place where you don't have to add more money. And so with an adjustment, sometimes you do, like the butterfly to a double butterfly. Yes, you're doubling the capital in the position. If I'm going from a call spread to a condor, I'm not adding more, but I'm adding more risk to the position, because now I'm on two sides. With a roll, like when I roll my naked puts, I'm trying to roll but still get a credit. I'm not trying to roll and pay a debit. I want to roll and get a credit. Now, sometimes what people say that, oh, hey, my covered call is in the money, so I'm going to roll it to the next expiration, but I'm going to roll it higher, or I'm going to I'm going to pay a debit for it, or roll it lower. Sorry, I'm going to pay a debit for it because the stock has run so much and blah blah blah. That I'm not sure that I I wouldn't want to do that. I don't do that
Right.
myself. I don't want to get a debit. I don't want to pay for a debit for money that I have not taken yet.
Correct.
So
Yeah.
like I'm paying a debit, so I'm paying that out of my pocket right now. But yeah, the stock went up, so technically I should be able to get that gain from the stock that I paid in the debit. But if I'm not selling the stock right away, I haven't collected it. And so the stock could come down and I paid the debit for no reason. So
Right.
that
Sure.
I don't like that. I would just roll straight for a credit. If I can get it and the stock comes down, hey, that's great. Then, the thing will work out. But
I agree with
so
that.
that's kind of the way I take a look at it. Um, and then there's also the other side of the coin where, hey, do you even need to adjust at all? Right? So we have that argument because um, depending on the trade itself, supposedly it should be like with the way we trade it, high probability. And so you take a look at it and you say, okay, hey, I get in, I'm going to do this, I'm going to get this much credit, this much return possible, and then I'll set this as my stop loss and get out at this percent or whatnot, or some people go like, I'm going to do two times my credit and I'm going to get out. Like, okay, so that's as long as they have a trading plan, they have something in place that they know this is my line in the sand and I'm going to get out. That kind of makes things easier, especially for beginners. Like if you don't have to worry about adjusting, certain trades are more inclined to or better off for adjusting than others. Uh, you know, and like again, credit spreads for some reason, there's a few adjustments that work, but not very many in my book.
Right.
Um, and so a condor, yes, I can play a lot more or with the condor than I can with just a single spread. I could play a lot more with a butterfly or a calendar and move things around than I can with a spread. A cover call, really not much you can do, you know? So
Right. And the
it,
type of what you're looking at. Like we talked about indexes and stops, right? Whether you're going to adjust those
yeah.
and flexibility and the time involved.
That's another thing. Yeah. So an
Time.
index, I'm more likely to adjust than any particular stock trade, depending on the situation, because an index is going to be moving slower, more stodgy than a stock. A stock can move. We looked at what is this? Mastercard, huge move on some news that came out that was totally unexpected, totally against the trajectory of the stock, and we can't do anything about it because it's done. We didn't know about it. It wasn't coming. It's done. A for a move like that to happen in the S&P or the Nasdaq, something major would have had to come.
Major,
And,
major. Yeah.
and you don't get it that often. But in something like a MasterCard, that was like, what'd you say, like a four
Yeah, it was
standard deviation move or
a
something?
five standard
Five
deviation.
standard deviation moves. So,
Yeah.
I mean, you don't have that in the S&P or the indexes or
No,
whatnot. But in MasterCard, I'm looking at the chart right now, and in the past 1 year, 52 weeks, you've had that one, two, three, four, five, six, maybe seven times. So yeah, this stock has those type of moves. They don't show up. They're not unexpected. They're unexpected. You don't know when it's coming, but all of a sudden, boom, it's there. In an index, usually not there. Not that much. You might get, one, maybe two standard deviation moves
one
if
or
it's a
two
really big
Trump
move.
tweets.
Yeah. If it's a really big move, then yes. Otherwise, you don't get that. So I'm more likely to um, adjust those type of trades than any stock trade.
Well, good. I'm glad we talked about it because,
So,
we use these words
yeah,
time, right? And you just kind of throw them out there and never really talk about them in a way.
yeah.
So,
That's good. Anybody who's watching, if you guys have any questions, go ahead and put it in the chat. If you guys have any things about adjustments, how to adjust, whatnot, our thoughts, that would be good time to put that in there. Michael's saying that GEV is getting really slammed today.
mm,
GEV is Vernova. Yeah, look at that. Vernova down almost 9%.
G-
Uh,
oh, G, okay, we're
Share. So, I mean, all the energy and the nuclear stocks are down. Um,
look at
and
big tech sell-off today,
mm,
continue.
Yeah, I mean Nasdaq's down almost 2%, 1.6. Um,
Got Nvidia down.
the AI trade is very, it's kind of tripping over itself now. Uh, so, and then that's leading to out supplies, so this is, Vernova is down today, um, possibly because there was a financing company that said, "Hey, we're not gonna give you $10 billion to build a data center for Oracle. We're not gonna let you borrow the money." And so what's the reason? You know, if these AI companies cannot build their data centers or they cannot get the financing for their data centers,
In
then they
trouble.
cannot grow. And then that means that their earnings per share and all those expectations will have to be coming down because they're not growing. They're not making any more money than, or they're, they're losing more than we thought they would lose. And so the stock prices are going to be coming down drastically. So then there'll be less spending on chips. There'll be less spending on people. Um, and it could definitely slow down. And then there will be less spending on building these data centers, and then we won't need as much energy, much electricity, or
Trickle down
nuclear,
all the way
or
through.
all that stuff. Yeah. Um, but really, I keep mentioning the pendulum. Pendulum really swung in the way of the AI. Like they could do no wrong, even with bad news. It just kept going higher and higher. Now it seems to be swinging back the other way. It's like, oh, hey,
Oh,
there's
there's
actually problems with this trade. It's not
oh,
going to
there's so
keep
much
going up forever.
euphoria that comes out and it's so unknown, right? And I think we get so caught up, we don't know what that really is, right? So it's a little bit more coming down to reality of what AI really is and where we're headed.
Mm-hmm. Yep.
That's it.
So it's interesting, right? Because we had the threshold workshop last week, and then I just saw that GEV, which Michael mentioned, it just crossed a threshold at $700. Let's see here. It was on the 10th. So on the 10th, it went from a close of 622, and then the next day it closed at 731. So over $100 in one day, which was, yes, five standard deviation move for this one also.
Sure
Um,
was.
but since then, so it crossed and it closed above 700. That means it should have gone to 770 based on the threshold theory. But since then, it has, after today, right now, it's trading at 625. So it's about $100 cheaper than where it was before. And it has completely filled the gap. So there's a gap from where it jumped from on the 9th to the 10th. And today it has completely filled that gap and is now coming and resting pretty much on the 20, the 100 and the 50-day moving average. They're all pretty much bunched up. So it's coming
Yep.
really
Right.
close to them. This, I think, would be, if you're going to get into it, I think this would be a really, really perfect setup to get into at this time. Now that the gap is closed. You're sitting right on the moving averages, not just one, but three of them together. You have a really good setup if you're going to buy this, with a stop probably right under the moving averages. So, you could buy this at 625 and maybe get out at like 590, maybe 595. Um, so you could set a pretty tight stop. And then hopefully this will run up to 770 pretty quickly. So that might
You
be
know, it always amazes me when we talk about filling the gap, um, how much that actually happens. Uh,
almost all the time.
almost all the time. It's incredible.
It's pretty
It really is.
reliable. One of the
It
most
really is.
reliable technical analysis things that I've come across, at least. Like, yeah, you know,
Yeah, I mean,
uh,
I can't really, I don't even, there only, yeah, possibly, I can't even remember a couple times where I did not do that. So it's very interesting in trading.
yeah. So, unfortunately, when you had your jump in MasterCard, there was no gap.
No,
So, so,
it just
so,
mooned.
yeah. So I was like, okay, maybe it's gonna come down and fill that gap. No, no gap. Sorry.
No, but that is how it works out sometimes.
Yep. So Michael's saying he actually sold the 622 and a half put this morning on, I'm assuming, GEV.
EV, yeah.
GEV is at 624 right
624.
now. So he basically sold at the money. He got $5.10. So $500 for that. And I think he's thinking the same way I am that it's probably
Mhm.
gonna pop up from here. So I think that's a really good trade. We'll see what happens.
That might be some nice money
Good
right
luck.
there.
Yeah.
Excellent.
Yep. What else, man? What else is going on in the markets today?
Oh, well, we had a nice winner in our Phoenix today.
Oh, awesome. Was it a
Um,
lottery or was it just a one side
so
or?
it was a quasi lottery. I wouldn't even call it a lottery, but it was heading towards a lottery. Um, did not work out, so we put the part two on, and it worked out very well. So I got out on a little bit of a lottery, I would say, and then I got out on the other side. So $825 win for today. So
Okay.
nice one.
So you did get stopped out on what, the put side?
Yeah, on the call side first. So yep.
What do you mean? You got stopped out on the call side?
Yep, in the beginning of the trade. So
Are you sure?
no, excuse me, sorry, wrong. Put side, put side. So I got thank you. So I got called out or stopped out on the put side very quickly, and then the call side ran. So let that run, and all in all profit. Also got out of the long put later in the day, almost about the same time. So
Okay. So
got
you're
some
out
nice
of the
gains.
calls, right? You're out of the calls itself.
Yes.
And that's something that Luke brought to our attention as a change to the Phoenix. Whereas in the past it was okay, if you get stopped out on one side, we're gonna try to let the other side expire. Um, but what Luke had said was that sometimes, based on the volatility, that might cause a double stop because the market is just going to jump up and down. And
Hmm.
so his idea was, okay, what if when we get out of one side or we have a stop loss on, or not a stop loss, but a take profit order set up so that if either side, the calls or the puts, ever gets down to like 10% remaining, so you've already captured 90% of the credit, then it would get out automatically. And he said that has stopped, that has kept him from getting double stopped out a few times. So that is something that we're adding or trying to,
Yeah.
figure
Yeah.
out what's the best way to do that.
Hmm.
And like today, normally, if we hadn't done that, then we would have been out of the put side, but you still would have been in the call side, and you probably would have to stay until the whole day and then exit at the end of the day if it was getting close to the money or whatnot. Um, but this way, you were able to get out, and you paid $200 for the calls, which is fine, right? You still made $800, $825. If you had not gotten out, then yeah, you could have made $1,025. But I would rather probably give back a little bit and get out
Hmm.
way early than have to sit in the trade for the rest of the day and take that risk of, well, what if it turns around?
And you're
Which,
you're you're relatively close, so I would be on erring towards taking that profit for
mm-hmm,
sure.
yes. Yep. So we continue to learn and we continue to apply. So that would be an adjustment to the trading plan, not adjustment to the trade
Ooh, a
itself.
special word. Okay. Yeah, you put that in there. So
Yep.
yeah, that was a good one. We may get a market power trade today. It's very possible.
Okay, where we're at now. What's the indicator saying?
Yeah.
Mr. Indicator is at 0.93.
Yep. That's what I thought.
Okay, awesome. I have been working on the 2006 watch list, 26, sorry,
Like
2026,
2006, man. You're going back in time.
the 2026 watch list. I have added some more. And for the first time ever since I've been doing this watch list, um, we have a to be determined on the list. So
Really? To be
I would
determined.
Yeah, I was up to 149 and I'm like, okay, that's not gonna, the designer's gonna get mad at me because it's not gonna balance out properly because there's three rows, right? So he's gonna want to put 50 in each row and then there's gonna be one left over and he's gonna get mad and I'm like, oh, okay, I gotta get fined one more. So I already went through all the lists and all the liquidity and all the different things that we go through, the pricing, I think so it took me a while to go through everything. We did have some that fell off, and we have some new ones on the list, but I needed that one more company. And I'm like, I don't know what it could be. So I'm doing some research, I'm looking at all of this, and then finally it pops up. And it's a news article, and it's like, oh, SpaceX is going public in 2026.
I do know that. Yep.
Verified by Elon Musk. So I'm like, oh, that is going to be the most traded company of next year. So okay, that's going to be on the list for sure. And so we should have it on the list. And so I put SpaceX on the list, and I don't know the ticker, so it's TBD, to be determined. The first
Just
time
put space.
ever, yeah,
That's, yeah,
I don't know
space.
what it's going to be, but for the first time ever, we've actually put a stock on the list that's not active yet.
I thought we were gonna have another contest. What stock would be added? No.
Yeah, that'd be cool. That would be a good one. Say, oh, rate
Think
your,
about it, instead of the SmackDown.
put your favorite stock. Yeah, and then we have a voting, and then everybody votes on their
Yeah.
favorite. We've had some like last year. Was it last year? I think maybe 2 years. I don't remember. But I know I had asked and I had put out feelers to different traders. They're like, hey, what are your favorites? And you came back with a couple like Marriott and Tractor Supply, and I looked at them. I'm like, okay, yeah, these fit, right? I could put these on. Um, and as soon as we did, somebody when the list came out, we got an email from somebody. Finally, it's about time you put Marriott on the list. This has been my favorite stock, and you guys have ignoring it for the last 10 years. I was like, oh my God, dude, calm down.
Yeah. You're very partial to the to certain stocks. It's a becomes a love affair with some of them.
Mm. So yeah, so maybe we will. Maybe next year we'll have a couple spots open and be like, all right, everybody, let's.
Yeah, we should have like a Option Genius voter. Um, they can vote for
Hmm.
which one they want. We'll see.
Yeah. So we put a whole bunch of names on there, and then everybody votes, and whoever gets the most votes, that one gets chosen and
There
gets
you
on the
go. I
list.
like that.
Oh man. So okay, so let's take a look. You want to do SmackDown?
Yeah,
Let's get an update on that. I'll let you share.
someone has taken the lead.
Well, somebody's
Someone
always in
has
the lead.
someone has extended their lead.
Uh-huh. All right. So Janet has a question before we get there. She goes,
Okay.
what is the adjustment you typically use on a credit spread? And she does say that she came late, so no worries. Matt, you go answer first. What's your preferred adjustment for a credit spread?
The preferred, well, it depends on what it's on, right? First of all, but and how it's moving. So I would typically, well, the first thing I want to do is see if I can adjust it without adding capital. It's kind of my number one, is how I would look at an adjustment.
Okay.
I would roll out to see if I can roll out in the same time frame that I'm currently in,
Mm-hmm.
expiration. So I check those two are high on my list. Um, Now, if it's going sideways, I would look at adjusting possibly into a condor. If it is, I believe that the stock is continuing to go up and I'm in a put spread, I will continue, I think, to see if I can roll down. And if it is, I think it will go down the stock, I will see if I can do a call spread possibly.
Okay.
It's kind of the general basics that I'm thinking about. But number one, I think if you have, my goal is to not add capital, I think is a
Mm-hmm.
big one for me. So I want to see when I'm looking at it and I'm analyzing it, whether I can adjust it without using capital. Yeah, first.
Okay.
So kind of see all your different options.
Right.
And
Okay. So for me, I guess there's when somebody's normally talking about adjustment, they usually mean, hey, the trade's going against me. What do I do? How do I fix it?
right.
But I also think that there should also be that you should always look for how do I make more money on this trade, if possible, without adding a lot of risk. So I think even trades that are going well, that could also happen in any situation. Last month, I do remember, or actually earlier this month, right? I had started with spreads on JP Morgan and Berkshire. And eventually I got to the point where, you know what? I think I can add the other side and turn these into condors, and it will still be a very um, safe trade because it's still going to be pretty far away from the money. And when that happens, you're getting more credit. But when I do that, I don't necessarily try to make more money. So I'm still trying to make the 10% I'm trying to make on the trade, but because I've gotten more credit, that means I can get out of the trade sooner.
Hmm.
So if normally my debit to get out of a trade on one side would be like, I have to let it go all the way down to 5 cents. Well, now that I have a lot more credit, I might be able to get out like 15 or 20 cents. And so I don't have to
Just out of that
wait.
other side.
Yeah, so I can get out of the trade a lot sooner, and because you also have decay on both sides. So that's on the profit side. On the going negative side, I agree with you. Normally I look at it, I don't want to add more money. Um, and sometimes I will look at it and say, hey, I don't even want to make money on this trade. Like if I can just break
Want to
even,
break
I would
even,
be
right?
okay. Sometimes, I always try to make money, but it's like, okay, if I can't, if I get close to break even, I'm okay. But if I have to adjust and I'm still going to lose money, I won't do it. So if there's no adjustment that can put me into a position to break even or make a little bit, I'm not going to do it. I'm just going to take my lump and get out because every time you do adjustment, you're adding to the risk a little bit because you're making the trade. You're at either putting more money into risk or um, you know, the risk continues and you have to stay in the trade longer to make it work. So,
Right.
if I have a trade, so we looked yesterday, I'll give the example yesterday, right? We took a look at that Visa or MasterCard, sorry. And we're like, okay, so we have this call spread. Can we roll the call spread higher in the same month? Yes or no? No. Can we add a put spread and turn this into a condor, and will that help us in any way? Yeah, that didn't really work out. Um, can we roll it to the next month? Do we want to do that? No, don't really want to do that. Okay. Well, in that case,
You have to,
you had said, "Hey, I want to do this," but again, it was taking more money. It was doubling the capital into the thing, and um, based on the chart, we're like, yeah, it doesn't look right, and it might be best just not to adjust this one.
right. We're looking to exit
Yeah,
at a good
so I'll probably be exiting that today based on I think MasterCard was up today.
point. Hmm.
Um,
So yeah, exactly.
but so now we do when we showed the credit spread mastery class, Janet, that'll when we roll that out, there are I think 8 or 10 different adjustments that are covered that we talk about, different ways that you could do it. But you asked my favorite or the one I typically use, and it will probably be what comes out to um, a roll away from the money and adding the other side. I think that's probably what ends up happening for me the most. So, like in the example of MasterCard, would have rolled my calls higher by buying them back and then rolling them higher to give me more room on the upside. But because I'm trying not to add more money, I do need some more credit. And so I would sell puts and turn it into a condor. That's probably what I normally have to end up doing. It's not my preferred method.
Right. And you don't have to do both sides at the same time as
Yes.
well.
Oh yeah,
Right.
yeah. You
Like
can
personally, I prefer to hold that other side if I can. And you can wait a few days and see how it works out and then add another side for that
hmm
additional credit as well.
Yeah. Yeah.
So
So that's probably the answer that I usually end up doing. Um, again, it's not my favorite because I'm still in trouble, right? I'm still in calls. Now they're further away, but now if it turns around, which happens to me a lot, like,
it can.
you know,
You go one side and all of a sudden you're in trouble the other side and you're like,
stock is
really?
going one way. I
Yeah.
adjust it, and then the stock turns around and goes back down, and I'm like, oh, great. Now I'm been whipsawed, and now I'm in trouble on the other
Mhm.
side where I was never, I never should have been in the other side in the first place. So, that's why it's not my favorite, but it does happen. If I can just get it out of the way, that's fine. If I have to add credit, if I have to add money to it, I'm okay with adding money to it. I know Matt said he doesn't like it. I don't have a problem.
Well, I think if you have to have a really good cause to add the money. You have to have a really good reason,
Well, I
right?
mean, the reason
I
is
think.
because I'm trying to
Well,
save
it
the
is, but
trade.
I think there's stronger reasons, I think sometimes where you'd be like, yeah, I like this, where it's headed. I'm going to add money in this trade as opposed to another one.
If I don't have to, I won't. But if I have to, then I'm okay with it. If I like, the new setup.
Hmm.
So, and again, sometimes it's like, how far is this stock going to run? Is it going to continue to run higher and higher if it has like a massive move? Or is the move done and it's now going to calm down and stabilize? So, based on that, the number in question is, okay, what do you think the stock's going to do? And based on that is how you adjust, is
Right. It's a little gray
realistically.
there, but you start to get a good feel for that, right?
hmm
And what you're going to do.
That's one question. What do you think the stock's going to do? The second question is, okay, it's been moving against you, but how fast has it been moving against you? If it's slow and steady, then yeah, I can probably get out of the way and roll up. But if it's coming at me like a roller coaster, uh-uh. I'm
Well,
not I'm not rolling.
look at the example we're talking about. It was a five standard deviation. I mean, it's like you couldn't even get out of the way,
Well,
right?
that
So
one, yes, but then since
different
then it's
case.
been calm. So
Mhm.
we don't know. Is it going to continue or not? That's the question. That's the question. That's why we couldn't come up with a an adjustment that we liked because hey, we had this big move. Is that going to continue against us? Are we going to have another five standard move? No,
Not likely.
not in this cycle, most likely. But could that have fundamentally changed the picture and now given the Bulls more, like more energy to continue to push it up higher from here?
Very possible.
Possibly. Yeah.
That's why we're looking to, yeah, exit.
Yeah. So
Yep, I agree.
cool. All right. Thank you, Janet, for that question. Wonderful. I loved it. Um, Now let's see what we got with who's
Oh yeah,
going
I always forget about
a
that.
little.
All right, all right. Okay, can you see?
Yes, I can. Could you enlarge it a little bit?
Yeah, I believe I can.
There we go. Much better. All right. Okay, so we got a 9% winner, we got a 27%, and that is that's it. We got 9,
Yeah,
27, and 4. Oh, we got a 6 or a 7.5. And everybody else is negative. My goodness.
yeah, is
So 27%, Mr.
over.
Luttrell, the
Surprise.
same as last time. AGQ.
AGQ
We might have
continues.
to we might have to put that in the rules. You can't pick the same one
You can't
twice.
do it, at least you can't do it twice.
No, you
You can't do
can.
it
You should.
twice.
I mean, if it's a good stock, it's a good stock. What are you gonna do?
Well, maybe two's the limit.
But yeah, look at this other stuff, man. Oracle down 16, Hood down 9, Netflix is down a little bit, BM&R down 12. There's only three out of like 18, 3 out of 17 that are actually up, three or four. That kind of tells you
What's
the
going on?
status. Um, Now this is not a big representation of all the stock market, but
But like we
these,
talked about in the beginning of this call, like nugget, right? Gold and silver.
yeah. Now
Big
these
winner.
are the names that people are playing right now to get the biggest bang for their buck. This is where they're investing, and it's not working. RR is down 18, mine down 27, Oracle is down 16 and a half. So,
Yeah,
yeah,
Oracle.
Nvidia
They're
is down.
printing.
The whole AI trade is negative for the month of December.
Well, there's also what a lot of
Interesting.
profit taking too, right? It's the end of the year. To some
Yeah, I
degree. Yeah.
guess. I
I
guess
mean, I think that filters in.
people selling to take their profits.
Hmm?
Maybe, maybe.
I mean, I think
But if, but if
that's
you think it's
one
gonna
little
keep, if,
factor.
but if you think it's gonna keep going higher, why would you get out? Supposedly, we're still in the first or second inning or third inning of this AI trade.
Yeah, I think some of them, want their bonuses.
Oh, I guess, yeah, they have to. So maybe okay, they take a little bit off the table. But
They
yeah,
come back.
AGQ is still in the lead at 27%. And we have what 14 days left in the month. Yeah, we'll see. We'll see how it goes.
Yep, you never know.
Yeah, well, good luck to everybody. Um,
Latrell got a nice little lead there.
yeah. And Michael, you're actually here. Michael, did you get your first prize? It was in the mail. I don't know if you got it yet from last month. Let's see if he responds. Uh, but yeah. No, maybe he's not here anymore. Okay. Yeah, so that's it for today. We'll be back on Friday. Um, and hopefully things will, let's see.
Settle down. Looks like it's
It's kind of stabilized, yeah.
gonna stabilize a little bit,
Yeah.
but we'll see. Got another hour.
Um, yep. Come on, baby. Come on, market power. Let's go.
A little market power, end of the day.
Yep. Cool beans. All
Be
right,
ready.
folks. We will see you next week. Oh no, we'll see you on Friday.